Good morning, everyone. Thank you and welcome to our Credit 101. I'm Pa Yang.
I'm Peggy Ayers.
And I'm Trish Toutloff, and thank you for joining us in our second topic with our Lending You a Hand 2.0 series this morning. We're so happy that you guys are here. A little bit of housekeeping. We are going to be recording this, so if you can't stay on for the whole thing or if you want to share this with somebody, that's totally okay. Also, if you could just make sure you keep your microphone muted. And then also, we're going to be, as far as questions, feel free to go ahead and throw it in your chat. Not sure if you guys know where that is, but if you hover over the top or the bottom, there is a chat button, and all you have to do is click on that to ask a question. And we'll be breaking throughout the whole presentation so that we can answer those questions for you. And then also, we're going to try and stay under 30 minutes. So I want to thank you guys for coming here. Today is all about lending you a hand and Credit 101. So if you have credit questions, if you're looking to buy a home, refinance, or make a big purchase of any sort, really learning about your credit is a really important thing. But I think I should make a disclaimer that if there are any major issues, one of the things that we do is we do recommend consumer credit counseling or Simplify. Okay, so those are the area credit counseling places. So today is all about giving you advice, giving you direction based on a lending standpoint only. Okay, so yeah.
Okay, so let's get started.
Yeah.
Okay, so many of you guys probably know what is a credit score. If you are totally new to this and you don't have a clue like me when I was 18 about credit score, we are going to discuss a little bit more how credit score comes about. So Trish, what I've seen these three company names all the time, but I have no clue what they are.
Yeah. Okay, so each of these, Experian, Equifax, and TransUnion, they all report separately on a credit report. As far as a lending institution is concerned, we use a combination of all three to come up with basically what we need to find out what your credit worthiness is. That just simply means that, like, are you going to pay back the loan that we give you or that an institution gives you, okay? So a credit score tells a lender, like I said, about your credit worthiness. It is
the different creditors. Okay, the different creditors, all of your people that you borrow money from, report what your payment history is, how much you're borrowing from them, what your monthly payments are. They report all of that to one or all three of these credit bureaus. So the credit bureaus compile all of that data and they come up with a scoring model that they provide to us when we pull your credit. And that basically, like Trish said, it's your credit makeup. It is how you're going to pay your bills, how you've paid your bills in the past.
So our goal is to actually get you into a home and be a successful homeowner. Okay, so that's why we gather the information that we gather.
Okay, so this leads me into the next question that I have. So if you are a consumer that uses Credit Karma, Credit Sesame, or even your credit card company that provides you credit score, so a very common question that I get asked, or we get asked a lot is, hey, I know what my credit score is. Can you use this credit score to just
tell me if I can get a loan?
Yeah.
So Peggy, what is the difference? Why can't you as a lender use Credit Karma, Credit Sesame, or my credit card company's credit score?
Okay, the credit, all of these different online companies, they compile a score, but they're using a different credit scoring model than what the lenders use. So we're requesting different information from that credit bureau and that the scores are compiled in a certain manner. Whereas Credit Karma, Credit Sesame, that's more of just your history, and they come up with their own score. I think they say it goes from 300 to 950. Ours go anywhere from 450 to 850. So it's just a different model, and we have to be able to pull your scores into our computer system in order to verify that we're not missing anything and to verify that you're credit worthy to make a loan to you.
Right.
Go ahead. No, that's
Okay.
fine.
So that leads me into the next slide. As you guys can see here, if you want to grade on a project or just on anything, you want 100%. This kind of gives you an overall view of what you need to do to get that credit score calculation. Now we're going to focus a little bit more on the 65% of your grade calculation. Peggy, can you explain to me why is it so important, why payment history and amount owed is so important to the lenders?
Payment history is just all of the people that you borrow money from, your credit card companies, installment loans, student loans, anybody that you owe money that reports into the credit bureau, they're telling us how you're making your payments. So if you've paid your payments on time, what we mean by on time is that you've paid those payments before the next payment is due. So in other words, if you're due for March 1st, we want to make sure that that payment is made by March 31st. Otherwise, you're considered late. So it tells us, it compiles your credit history, so how you've been making your payments. The other thing that it also tells us, which is 30% of your credit bureau, is your ratio of how much you owe compared to the credit limits that you have. That is huge. If you're high on your, let's say you have $1,000 credit limit on a credit card and you consistently carry 900 or 950 or even 1,000, it's so easy to go over that credit limit just by all of the fees that they start charging you, the interest. And if you're only making the minimum payment every month and then you're late, you're starting to go behind the 8 ball. So 30% of it is based on your credit limit versus the amount that you owe on that credit card.
Now, Trish, if I want 80%, because we all know to get a passing grade, maybe a B, which is 80%, and that's the 15% of the length of credit history time. Can you explain that a little bit more to me, why that is so important?
Yeah. You know, if you've established good credit on one of your credit cards, it's so important to keep that credit card open. You know, you guys, we all want to pay that stuff off and get rid of it. We just want to forget that we had, you know, that debt once we pay it off. But the thing is the longevity of an account is really very important in your whole big picture of your credit history. So what we're trying to say is if you have an account and you've established good credit with that account and you pay it off, that's totally great. Don't close it, because we need that longevity of that account. Okay, we want something longer than 6 months old as far as a lending perspective is concerned.
So if I'm totally new to this credit industry and I'm out of high school or out of college, especially if you're 18 and you want to open that credit card, how do I start building that up? How do I build my credit up so that I can go out there and get myself a loan?
A lot of people in the past would put their children on as authorized user onto their credit card. We don't recommend that, because if you, let's say mom and dad, you opened this credit card 10 years ago and your child is 18, you add them on as an authorized user, so they start, what the thought process is that they're going to establish credit. That doesn't work anymore in today's world. It may give them a credit score, but it's a fictitious credit score because obviously that child wasn't making the payments at 8 years old,
right?
So 10 years previously. So we highly recommend that these new kids open up their own credit, and sometimes it's difficult to get that when you're first starting out. Or if you've had some dings on your credit in the past and you want to reestablish credit, sometimes you have to get what we call a secured credit card. A secured credit card is where a lender will give you a credit card, a credit limit up to like, let's say $200 or $300, they're going to ask you to deposit $200 or $300 into their financial institution. So they hold that as collateral. That means that if you don't make your payments on time, or if you don't pay it off, they'll take that money out of your savings account and pay that debt for you. That is not a good thing. So you never want to get into the situation where you don't make the payment. The whole key is that you're building your credit. So again, 35% is that you make those payments on time within the 30 days or as soon after the payment due date. And you don't want to max out that credit card. In other words, if they give you a $200 credit limit, you want to keep it less than 30% of the credit limit. So that would be $60. What we tell people there is to charge gas one time per month. Okay. Just when you get that credit card, charge gas, put that credit card away, don't use it, let it cycle. When you get that bill, pay that gas bill off in full. Now that's your key to charge gas again. Right. So, and just continue that cycle. After about 6 months, you'll be shocked at how that will help you. Right. The other way is parents will co-sign for children's loans, student loans or installment loans, and that's okay. But as a parent, you want to watch out and make sure, have some control over that. Not that you want to be a helicopter parent, but this is going to affect your credit if you co-sign for your children and they don't make that payment. I had one couple come in to me. They were all ready to buy, you know, their kids were moved out of the house. They were on their own and they wanted to buy their forever home. And they came into me. I pulled their credit and their kids hadn't been making their student loan payment. You know what? Those parents could not buy their forever house. Right. And man, did that change after, you know, I talked to them and showed them their credit bureau. So you've got to be really careful that if your children, if you are co-signed for your kids or people that you know, friends or whatever, that they're making that payment on time and they'll let you know if they're going to miss a payment so that you can control that payment history. So just an FYI there.
So if you are totally starting out fresh with zero credit, it usually general time that your credit score will be established is about 6 months. Right. Just a little key there for you guys so that you guys understand that. Okay, you guys, we understand that life happens and you don't need to be ashamed about your credit issue. Credit issue will usually affect a client's rate and ability to qualify, but you guys, we're not here to just give you a loan. We're here to help you to get you the best loan, the best interest rate, and to give you the strategies and tools to help you so that you can get into those good loan and the best interest rate.
And the perfect house.
Yes. Now you're probably wondering, how does my credit score affect my rate? Your credit score affects your interest rate because your interest rate is a reflection of risk to us as lender. So the lower your credit score, the higher the interest rate. The higher the credit score, the lower your interest rate is. It all goes into what type of loan program can we qualify you into based off of your credit score. Now, just a little bit about that is that your credit score does not give us the whole entire or determines your interest rate. There's a lot of factor that goes into it. This is just a little factor that
that's a major piece, but it is a piece.
Yes.
Just a piece.
As you can see to the side, we give out a little bit example of like conventional is a little bit more stricter on credit score versus FHA, USDA, and VA is a little bit more lenient on those. Okay, so I've been hearing that the credit bureau is adapting to a new credit score, and I'm freaking out because I'm not sure what's going on. So can either one of you explain to me what's going on so that I can be prepared for the summer of 2020?
So right now, the way that, you know, we look at credit, the way that it's being reported is just a snapshot in time. So It is basically, you know, what's going on right now. So if you pay your credit card off last week and the credit the credit agency reports it this week, it's going to show a zero balance. Good credit, right? Well, what's happening this summer is that it's going more towards a trending credit. We're going to be able to go back 24 months and see what is happening, what has happened over the course of time. So that strategy of paying off a credit card company right before it reports is no longer going to apply. So if you've been writing credit, which means if you've been, you know, racking up your credit and then paying it off and then racking it all the way up and paying it off, not really abiding by that 30% rule that we talked about earlier, we're going to be able to see that. And what they're saying is that it's going to affect somebody's rate about 20 points, either higher or lower, depending on how you're using your credit.
And now it's going to be if you keep that balance
Yes.
up there consistently.
Right.
Because I, like a lot of people, use my credit card for points. So
Right, that's true.
I charge quite a bit on my credit card every month, but I pay it off every month.
Yeah.
That's going to show up. So that's going to be positive for
Mhm.
someone like me. Whereas if somebody has 3 credit cards with $1,000 credit limit on each one, and they're carrying a $900 balance on every one, they've used the maximum of their credit, and if they consistently keep that up there, that's going to affect them negatively.
Right.
So the people that pay it off every month, that's going to actually show up positive.
Yeah.
Whereas before, it was just that snapshot in time that we would see versus that I am using the credit wisely.
That's right.
So that's a huge change this summer. The credit bureaus have been compiling that information for the last approximately 3 to 4 years was when this came into effect, and now it's actually being implemented this summer. So if you have a lot of credit out there and you're maxed out on your credit, that's where it's really going to affect you negatively.
That's right.
Okay, so we're going to break out into our Q&A session. Do you guys have any questions? Feel free to type it in the chat box and we will answer a bit here.
Can't really see.
It's okay. I'll be your eyes.
Yes.
Okay, and if the question comes in, excuse
there.
me.
Okay.
Okay.
What is the minimum score to qualify for a home loan?
Yeah.
It really varies depending on the loan program. Generally, we can do something down to like a 540, somewhere in there, but truly, it's not just the credit score, it's the credit makeup. So, you know, it depends on the individual. So someone that is less than, let's say, a 620, we want to talk to them because we do have to get an approved eligible through the automated underwriting system in order to go that low. So, I mean, usually like about 540 is like the lowest, but we'll, you know, if you're close to that, we can usually give you some tips and tools on how to bring it up. So we definitely want to talk with you and then give you some ideas.
And then we also have some new programs that we've been working with just recently to address the lower credit scores. Yeah, and so it really is going to, like Peggy said, be based on that conversation that we have and what's all happened and stuff like that.
So just to kind of give you guys an idea, just because you have like a 560 credit score doesn't mean that you can get a loan, because it all reflects on if there's any collection out there,
Right.
You know, all
So
that.
it's the credit makeup, it's not just the score.
Yes. So that's why we always want to talk to you guys before you guys make that determination.
Yeah.
And also, don't be looking at Credit Karma, Credit Sesame, those scores, because those aren't accurate.
Use it to monitor your
Yes.
activities. If there's any inaccuracy, that's what you're using those for, not for your true credit score. Okay? Any other questions? If not, we will be moving forward. And then if you do have any question, just type it in and we'll answer that in the next breakout session. Okay, so here's an overview of all the types of credit issue that somebody may have. And We're just going to go quickly through these because this may apply to you and it may not apply to you. So for foreclosure, that's pretty simple. If you've given a house back to the lender, I want to dive into bankruptcy a little bit, and I'm just going to move this slide right along with it too. There are two chapters that we've seen a lot of borrowers with. Is the chapter 13, which is a repayment plan, and chapter 7 is where you pretty much start all over. General waiting time is for chapter 13 is 1 to 2 years, and chapter 7 is 2 to 4. If there's multiple bankruptcy, we definitely want to talk to you before you guys make that determination. Peggy, judgment.
A judgment is where someone has taken you to court over a bill. So you didn't pay your landlord and your landlord took you to court and the judge rules in favor of the landlord. Then they place a lien against you at the courthouse level, and that's actually what we call a judgment. So that has to be paid out in full prior to us closing on a loan.
That's right.
Mm-hmm. That is really important, and if you don't tell us and we don't know that up front when we do the pre-approval, we will always find out during underwriting.
The background check.
Yep.
Totally.
Trish, collection and charge off that we see a lot. What are some type of collection that we see a lot that
oh my gosh,
we have to deal with?
You guys, we get a lot of medical collections. You know, what happens a lot of times is, you know, if you are just, you know, 30 days late or something like that on your, you know, 30 or 60 days late on paying that medical bill, they will put that right into collections. So what that means is they have sold that to a collections company and it gets reported on your credit report now, and now you can't go back to the medical facility and try and pay that off. You've got to pay it directly with the collection facility. And it happens actually pretty quickly. What would you say, Peggy, 30, 60 days?
It's like 30 days and they're sending it into collections. And
yeah.
General rule of thumb. And the problem is they send every single visit into collections separately. So it can just decimate somebody's credit.
Yeah.
So you've got to be careful with that.
Now, charge off, that's on credit cards that you're not able to pay off, and the company doesn't want to come after you anymore, and they know that they can't collect it, so they're going to just charge it off. We will go into dispute in a couple of slides later.
And one thing on charge-offs is, like, if you have a car loan that you, let's say, is repossessed, so you've given that car back to the lender, what happens there is you've signed the note for, let's say, $10,000 that you borrowed, and they took the car as collateral. When they sell that car, let's say they only get $6,000, and you technically still owe them that $4,000, and they will throw that out on your credit bureau, so they don't come after you potentially any longer, but they'll throw it out on the credit bureau, so when you come into us, that's when you find out about it.
That's right.
So just an FYI there.
Very important, because we do see that a lot, and especially on also lease card too, that there's balance that needs to be paid off.
Right.
Late payment and overdraft. Why is late payment so important to consumer to know that lender will see this?
Late payments are the every time that you are late, 30 days or more late on a creditor. So anything like that, like we said earlier, that's definitely reported. Overdrafts, if you're overdrafting your checking account, in other words, you're spending more than what you have in the account every month and multiple times, that can affect your the loan process as well. People don't realize that.
Right.
The other thing though, if you've got like your savings account attached to your checking account and the bank moves it every time a check overdrafts it, that doesn't hurt you as much. But if it's a true overdraft and you're getting charged every month and you're running in the negative, that can be a negative because that's how you're handling your money.
That's right.
Okay, so we know life happens, you guys, and there are big life events that happens that may cause, you know, a credit issue.
Absolutely.
bottom line with those credit issues, we want you to meet with a lender like us before you make that determination whether you can buy a house or not.
Yeah, a lot of people just think that they can't. And, so, you know, sometimes it's just telling your story.
That's
that
right.
we have to get your story, and we might have to write up some letters of explanation, and we might have to get some documentation to document what happened in your life.
That's right.
So life happens to, you know, things can happen to good people. That doesn't mean that, you know, you're necessarily bad and that you're a bad risk.
But there's a little caveat there. I do want to explain just really quick extenuating circumstances. Extenuating circumstances are catastrophic events. It's not when you've quit a job or something like that.
Or divorce.
Or a divorce. Those are terrible events, but they're not catastrophic. We're referring to, you know, you've had a major illness and it took you down for a long time. Those are things that we can really take into consideration. So just don't be discouraged if you have those things that have happened and now you're looking to buy a home. We can help you with that too.
So we're going to stop here for more question. Just answering some question from before is how will it, oops, going back up. Okay. How will it affect a credit score if 2 cards are paid off every month, but one major credit card is a high balance and not able to pay it off?
I would say just continue, don't miss a payment on it, and just continue chunking away at it as much as you can. Don't charge any more on it. And I mean, it might affect your score by maybe 20 points come this summer, but it's not gonna, if you're paying your bills on time, it probably isn't going to be catastrophic. So we'd have to pull your credit to see exactly where you're at.
Another question is how many credit card is too much or too little?
The credit bureaus like to see 3 trade lines. So in other words, they like to see a mix of credit. So car loan, student loan, credit card, mortgage. They like to see a mix, but otherwise some lenders want to see 3 trade lines open for a minimum of 12 months and continue to be open. So that's where Trish said don't close them.
Yeah.
So usually about 3 trade lines. You know, I mean, if you have a couple more than that, it's not catastrophic. It's just if you have 5 credit cards and they're all maxed out, that's where it's really going to hurt you.
Absolutely.
Whose credit should be worked on if both parties, married couple, have not so good credit? This really depends on what you're purchasing. Like for
incomes.
And income. So like for the mortgage industry, we can do it based on one person's credit score, but it's going to be solely on that person's income only. So if you want to utilize the other person's income, then we got to work on their credit score too.
Yeah, and then I think it's also important to, a few weeks ago we had an incident where, or not an incident, but a circumstance where somebody did come in and they had a bankruptcy a long time ago, and then both parties had, their credit was very challenged, and it looked like they might be going down that road again. In that case, we recommend them going to some sort of consumer counseling, because we don't advise on those types of things, but, we can definitely guide you in how to improve that.
So usually I would say work on the higher income earner and use that one as a tool first.
Okay, so the next question is going to be right in along to our next slide. So we will answer that in the next slide, okay? So you guys are probably dying to know, how can I repair my credit if I do have credit issue? If you guys been here listening to us, you guys probably know what that number one thing is: to pay your bills on time.
Yes.
To pay off debts and keep balance low on credit card and other revolving credits. Applying for new credit accounts. You guys,
when the stores offer you a 20% discount to open up a new card and you're trying to build your credit, please don't open it.
Right.
It's not
a
worth the
deal.
20%.
If you're carrying a balance from one month to the next, it's not, and you're getting $20 off on that $200 purchase, it is not a good deal if you're carrying the balance. So don't get the card.
Right.
Don't close unused credit cards. Okay, so if you are establishing credits like me, it will hurt you more than
us old people over here that have credit for a long time. So you just got to be careful of that you're not paying it off and then closing it. Because if you've had that account open for any length of time, over 12 months, it's actually helping your credit even with a zero balance. You just need to use it maybe once a year to keep it active.
Yeah.
Don't apply for too much credit. Know that all inquiries are hard inquiries, and they will stay out on your credit bureau for at least 2 years. Please don't dispute any collection just because you're on the tangent of disputing.
What happens with a dispute is some people will go out and they will just take their credit bureau and they will put in a dispute, which they're arguing the bill to every single lender that they owe money to. That's going to hurt you because that's not a true dispute. You only want to dispute those bills that are true inaccuracies on your credit bureau. So a true inaccuracy might come into play in pause culture. Everybody has the same names. So a lot of times they'll track incorrectly at the credit bureau level. So if that truly isn't your bill, definitely, do a dispute on it.
Yes.
But in my culture, so we might have juniors and seniors.
Yes, that's right.
So sometimes the parent doesn't have good credit and it's reporting on to junior's credit bureau. So in that case, that would be a true dispute.
That's right.
But just to go out there and just dispute everything, it's not a good thing. It ruins your credit.
Yep. And you guys, if you guys want a free credit report, you guys can go to www.annualcreditreport.com and pull from all 3 major credit bureaus that you can receive that once a year for free.
And don't pay for your scores. Just get the credit bureau and you want to monitor your credit on an ongoing basis.
So that leads us into one example of one of our borrowers that we pulled credit in August. And as you can see here from the 3 credit bureau, and then again in November, and you can see a 67-point jump from Experience, 57-point jump from TransUnion, Equifax, 63 points. What was the difference? Because from my understanding was that one medical collection and everything was the same. That
this person had really good credit prior to. She had one medical bill that went into collections pretty recent, right like July of 2019. And that one collection hit her credit bureau by about 67, 70, 60 some points. Okay. What we told her to do was to call that collection agency. She had the money to pay the collection. She called that collection agency and she asked them to pay what it would take to pay to delete this off her credit bureau. In other words, remove it in full. Normally, if you just pay off a collection, that'll just report as a zero balance, but the collection, that hit of a collection will still remain out in your credit bureau. Paid to delete, they're actually physically removing and pretending like that collection never hit your bureau. That's what happened in her case. So she did the pay to delete. You always want to talk to them, get it in writing before you give them any money to make sure that you've got something to hold them accountable, and then ask them to delete it off your credit, remove it entirely. I had one man that came into me, I pulled his credit 1 year, and he came back about a year later and he said, okay, Peggy, I'm ready, let's pull my credit again. And I'm like, whoa, he was in the 500s and he had a ton of collections out there. And I pulled it and all these collections were gone. And he actually got them deleted off their credit bureau. So Sal, going back to your question, if a person pays the collection in full, it will only report as a zero balance unless you do this.
Yeah.
So this is huge.
Another thing I wanted to just quickly mention with pay to delete is I want you guys to understand this woman had a very low balance. I mean, we're talking less than $400 that she needed to pay. She probably paid less than that, and then they also deleted it. So we're not talking thousands of dollars worth of doctor bills that affected her. We're talking one bill below $400.
Mm-hmm. So moving on, you guys are probably wondering, now how long does it take to rebuild my credit score? There is no quick, easy fix to this, you guys. It all depends on the reason and making your payments on time. Delinquency and public record will stay out on your credit report for 7 years. Bankruptcy will remain for 10 years and inquiries for 2 years. So we're going to stop for just
one thing that I do want to bring in, sorry about that.
No problem.
Rebuilding your credit score, we have different tools through the credit bureau where once we've pulled your score, we can do like what if type scenarios. So if you pay this off or if you do this, so to see approximately what that credit increase would be by doing that. So that's where it's so important. Please let's sit down and chat and we can play with those tools with you. Everybody is so different. There is no one credit bureau that's the same.
True. Okay, so we're just going to stop here and answer a really quick question here. How do I satisfy a judgment? So usually you satisfy a judgment by paying it off. You get that, if you don't know what that judgment is, you can usually look that up through the Wisconsin Circuit Court or whichever state you're from. You can look that up and then
they give you a satisfaction or a release of that judgment that has to be recorded at the courthouse because remember a judgment is a lien against at the courthouse level. So you have to get that released and satisfied, so recorded at the courthouse to actually physically show that that's been paid.
I know we are just a little bit past our 30 minutes, so we're trying to zoom. Nope, there's no more. That was the last question. Okay, so Trish, now does my credit score determine whether I get a loan or not? I know we kind of talked about this in the beginning, but
no, it's your monthly debt payments divided by your gross monthly income, and that'll equal your debt to income ratio, okay? So your debt to income ratio also is configured in there, and then we're looking at the 3 C's. You might have heard one of us talk about this in previous videos, but credit, capacity to repay, and collateral. So we're looking at your credit report, your capacity to repay the debt, and then the collateral. So is the property worth what you're paying for it? So those are the 3 C's in a nutshell that we look for along the debt to income ratio and stuff like that. So
it's your total makeup. It's not just one thing.
That's right.
Yes. Okay, so if you guys have any questions, feel free to either email one of us and we will be happy to help you guys. These are Consumer Credit Counseling Service and simplifies contact info if you guys want to dive more into how to repair your credit because they're the expert. We're just coming from the lender's viewpoint.
Right, and it's so important that we pull your credit, we can give you strategies to fix it, and then we can get you into a home and become a successful homeowner.
That's right.
Questions?
And
go ahead.
And then before we answer this question, just wanted to let you guys know, don't forget to tune in next month. We're going to be talking about down payments 101. She's got a screen for this. Okay, March 18th at 9 a.m. Okay, so stay tuned for that. And let's go ahead and answer this one.
You can reach out to Peggy, me, or Trish at 920-457-5626.
Yeah.
Thank you for joining us.
Thank you.
Hopefully we will see you guys next time on our down payment 101 on March 18th at 9 a.m. And that's the registration
All right.
link.
Thanks and have a great day.
Bye. See ya.
Bye.